Welcome back to the Wealthy Good Life podcast. We've gotten some really interesting thoughts from you all on the topic of building credit. And today we're going to dive deep into those ideas, pull out the most valuable stuff so we can give you a clear path forward.
Yeah, this should help you make some real progress.
Think of it like your personalized roadmap to building a really solid credit history and making sure you can kind of sidestep those common pitfalls and, really focus on what works.
We'll cut right to the chase.
Yeah. And we're going to start by exploring why having a good credit score is so important for you in so many different parts of your life.
Yeah, it's way beyond just loans, right?
Yeah.
We'll be looking at things like even getting an apartment or setting up utilities. And, sometimes even jobs can be affected by your credit.
It's crazy how far-reaching it is.
Yeah, and then we're going to get really practical. We're going to break down the concrete steps you can start taking right now.
Love that.
Whether you're totally new to building credit or you're working on boosting a score you already have. Let's jump right in. So, I think it's really helpful to start by understanding that your credit history is like this ongoing story of your financial responsibility.
It's like a financial report card, basically.
Yeah, exactly. And your credit score, that magic number, is like a summary of that story. And it's used by those big credit reporting agencies. You've heard of them: Experian, Equifax, TransUnion.
They're the ones who are kind of keeping tabs on us.
They're the keepers of the score.
Right.
And they use it to predict how likely you are to repay any debts you take on in the future.
Makes sense. Makes sense. And I think, most people probably associate good credit with getting approved for loans like a mortgage or buying a car and obviously getting a better interest rate, which saves you tons of money in the long run.
Absolutely. That's the classic example. But what's so interesting now is how much more impactful your credit score has become.
Yeah, I think it's become even more vital for those day-to-day things. It's like it's seeped into every aspect of our lives.
Right. It used to be that you just thought about it when you were making a big purchase, but now it can affect so much more.
Exactly. Like, think about renting an apartment. Landlords, more and more, are using those credit checks to figure out how reliable you might be as a tenant.
It makes sense for them, right? They want to know you'll pay your rent on time.
For sure.
And even some utility companies, believe it or not, they might check your credit before they connect your service.
I've definitely heard of that.
And you might be really surprised to learn that some employers, especially in certain fields, they look at credit reports during the hiring process.
Yeah, I've heard that in finance, for sure.
It can be a factor in their decision.
So really, it's like essential in navigating that modern financial landscape.
Yeah, no matter what your goals are.
Exactly. Okay, so let's get practical then. Let's start with credit cards because for most people, that's where their credit journey begins.
Great place to start.
So say you're just getting started. Maybe you don't have much credit history yet. Where do you even begin?
So one great option for those just starting out is something called a secured credit card.
Okay.
Now, these cards require you to put down a cash deposit. It's kind of like collateral.
So it's almost like you're backing up the credit limit you're getting.
Exactly. And that deposit often becomes your credit limit. The nice thing is that they're usually easier to get approved for compared to those regular unsecured cards.
Okay, and why is that?
Because there's less risk for the issuer. If you don't pay, they've got your deposit. But the main benefit for you is that it lets you start building that positive payment history right away. And the goal is to eventually graduate to an unsecured card.
So it's like a stepping stone.
A training ground.
Okay, I like that.
Now, another type of card that's great for those new to credit is a student credit card. These are designed specifically for college students.
That makes sense.
They might not require a deposit, and they can come with perks that are relevant to students.
Oh, like rewards or discounts on things students would typically buy.
Exactly. And then there's this newer category of cards that's been emerging, kind of like a hybrid between debit and credit.
Interesting.
Yeah, they may not even require a credit check at all. Some do require a deposit, but they give you a bit more flexibility than a traditional secured card.
So they're kind of blurring the lines a little bit.
Exactly. Now let's talk about actually using your card responsibly to build that credit.
Okay, because just getting the card isn't enough.
Right. You have to use it wisely. And the most important thing is to only charge things that you would normally buy anyway and that you can afford to pay for in full each month.
Yeah, don't go crazy and buy things you wouldn't normally just because you have the card.
Right. Stick to your budget. And the key is to pay your balance in full every single month.
Why is that so important?
A couple of reasons. First, it shows lenders that you're responsible with your money.
You're not getting in over your head.
Exactly. Second, It builds that positive payment history, which is the most important factor in your credit score.
Right, so it's not just about using the card, it's about using it the right way.
And it helps you avoid those pesky interest charges. Remember, those can really add up.
Nobody wants that.
Yeah.
Okay, you mentioned that payment history is the most important part of your credit score. How much does that actually count for?
It makes up a whopping 35% of your FICO score. That's the most common type of score.
So it's huge.
Yeah, even one missed payment, like if you're 30 days or more late, that can really hurt your score.
Yeah.
And the thing is, it can stay on your credit report for up to 7 years.
Wow, so that's a long-lasting impact.
It really emphasizes how important those on-time payments are. Okay, we've talked about paying on time.
That's a must.
Now let's talk about the amount of credit you're actually using.
Okay.
That's called your credit utilization ratio.
What's that exactly?
It's the percentage of your total available credit that you're currently using.
Okay.
Like if you have a $1,000 credit limit and you've got a $300 balance, then your utilization rate is 30%.
Got it. And is there like a good percentage to aim for?
Generally, you want to keep it below 30%. But if you're really trying to maximize your score, people with the best credit scores usually keep it even lower, like in the single digits.
Okay, so the lower the better.
Pretty much.
Yeah.
And here's the really cool thing. Just by lowering your credit utilization, you can actually see your score improve pretty quickly.
That's good to know. So what are some things you can do to manage that effectively?
One strategy is to request credit limit increases from your card issuer.
Okay.
After you've used your card responsibly for several months and you've built a solid track record, you can request an increase.
Got it.
And if your credit limit goes up, but your spending stays the same, your utilization rate goes down automatically.
Oh, that makes sense. So it's not about actually spending less. It's about increasing that available credit.
Precisely. But be careful. Don't just spend more because you have a bigger limit.
Right. Right. Okay, so what about other types of credit cards? Are there any that might be good starting points for people?
Yet, department store or gas station cards can sometimes be easier to get approved for when you're first building credit.
Okay.
But eventually, you'll want to transition to a more widely accepted card.
Makes sense. So what about applying for multiple cards at once? Is that a good idea or a bad idea?
Definitely try to avoid applying for too many cards in a short period.
Why is that?
Each time you apply, it creates something called a hard inquiry on your credit report.
Okay.
And too many of those can actually lower your score temporarily.
Oh, I didn't know that.
So space out those applications. Maybe give it 6 months or so between each one.
Good advice. What about closing old credit cards? Like, say you have one you don't use anymore, should you close it?
Unless there's a specific reason, like high annual fees, it's generally best to keep those older accounts open.
Okay.
It helps to increase the average age of your credit accounts, and that can actually boost your score.
That's good to know. Okay, so we've talked a lot about using credit cards to build credit. But what if someone doesn't want to use credit cards? Or maybe they're not eligible yet?
There are still plenty of ways to build credit without relying on credit cards.
Okay, good. Because not everyone wants to go that route.
Exactly. One option is something called a credit builder loan.
A credit builder loan.
Yeah. It's a small loan, usually a few hundred to $1,000, and it's specifically designed to help you establish credit.
Okay, how does that work?
So with a credit builder loan, the lender typically holds the money in an account until you've fully repaid the loan.
So it's not like you get the money up front.
Right. It's more about building a positive payment history. And those payments get reported to the credit bureaus, which helps your score.
So it's a structured way to show responsible repayment.
Exactly. Now, another option is to become an authorized user on someone else's credit card.
Oh, that's interesting.
Yeah. It can be a good option if you have a family member or a partner with good credit who's willing to add you to their account.
So you're basically piggybacking on their good credit.
In a way, yes. Their positive payment history can have a positive impact on your credit report. Just make sure that they have good credit habits, of course.
And that they're okay with you being added to their account.
Definitely.
Okay. So what about traditional types of loans? Can those help you build credit too?
Absolutely. Installment loans like auto loans, student loans, personal loans, even mortgages, those are all great ways to build credit as long as you're making your payments on time.
Okay, makes sense. What about those regular bills you pay every month, like utilities and rent? Can you get credit for those?
This is an area that's becoming more and more helpful for building credit.
That's great.
Yeah. There are services like Experian Boost where you can link your bank account and potentially add your on-time payment history for things like utilities, phone bills, streaming services to your credit report.
So it's like you're getting credit for being responsible with your everyday expenses.
Exactly. And there are also rent reporting services that can add your rent payments to your credit reports.
That's great.
Now, not all credit scoring models consider those factors equally, but it's still a positive step.
Definitely. What if you're in a situation where you just can't qualify for anything on your own? Are there any options for getting help?
If you're struggling to get approved for a loan or a credit card, you might consider finding a cosigner.
Okay, and what's a cosigner?
A cosigner is someone with good credit who agrees to be responsible for the debt if you can't pay.
So it's like having someone vouch for you.
Yeah,
Yeah,
it can be a good option, but it's really important that both you and those signer understand the responsibility involved because it affects both of your credit scores.
definitely.
Okay, so we've covered a lot of ground on how to actually build credit.
Yeah, lots of different strategies.
Now let's zoom out a bit and talk about what actually goes into determining your credit score.
Perfect.
We already talked about payment history, which is the most important factor. It makes up about 35% of your FICO score. But there are 4 other key factors that you need to be aware of.
All right, let's hear them.
Number 2 is the amounts owed. This makes up about 30% of your score. And it includes not just the total amount of debt you have, but also that credit utilization ratio we talked about earlier.
Right, how much of your available credit you're using.
Exactly. The lower the better. Then there's the length of your credit history. That's about 15% of your score.
Okay.
A longer credit history is generally better because it shows lenders that you have more experience managing credit responsibly.
So it's about building that track record over time.
Exactly. Next up is your credit mix.
Credit mix. What's that?
That's the different types of credit you have.
Oh, okay.
Like you have installment loans like car loans and revolving like credit cards.
Got it.
A good mix shows that you can handle different types of credit responsibly. And that makes up about 10% of your score.
Okay.
And then the last factor is new credit.
Like opening new accounts.
Exactly. That also makes up about 10% of your score. When you apply for new credit, it creates those hard inquiries we talked about, which can temporarily lower your score.
Okay, so don't go on an application spree.
Exactly. It's best to space out those applications.
So those 5 factors are what lenders really look at when they're trying to assess your creditworthiness.
That's like the formula.
Got it. Okay, now let's talk about what you can actually do to improve your credit score if it's not where you want it to be.
So the most fundamental step is to make sure you pay all your bills on time. Every single one.
Yeah, that's definitely key. Are there any tools or strategies that can help with that?
Definitely. Setting up reminders or automatic payments can be a lifesaver.
Takes the pressure off.
It takes the guesswork out.
Yeah.
Another really important step is to work on paying down those credit card balances, especially if they're high.
Right, that credit utilization ratio.
Exactly. And even if you can't pay the whole balance every month, just try to make as big of a dent as you can. You can even make multiple payments throughout the month to keep that balance lower.
Okay.
And as we talked about earlier, you can request those credit limit increases.
To bring down that utilization rate.
Right. That's a really quick way to see some improvement in your score.
Great tip. What about if you spot errors on your credit report? What should you do?
You absolutely need to check your credit reports regularly for any inaccuracies. You can get free weekly reports from annualcreditreport.com.
So you can keep an eye on things.
Yeah, and if you see anything that's wrong, dispute it with the credit bureau. They're required to investigate and get back to you.
Good to know.
Okay, now let's talk about those old collection accounts that might be lurking on your report.
Yeah, those can be a pain.
So, if you have any collections, you might consider paying them off. Sometimes the collection agency will stop reporting the debt once it's paid.
Okay.
And definitely check your reports to see if any paid collections are still showing up or if they should have fallen off due to age.
Because negative information doesn't stay on your report forever, right?
Exactly. We've already talked about secured credit cards as a good starting point, but they can also be helpful for rebuilding credit if you've had some bumps in the road.
Okay, so they serve a dual purpose.
Yeah, and remember those rent and utility payments. Using rent reporting services and Experian Boost can give you credit for those positive payments.
So everything counts.
Every little bit helps.
Okay. And what about that credit mix we discussed? Does having different types of credit actually matter that much?
It can definitely help. If you mainly have credit cards, think about adding a different type of credit, like a small installment loan.
Okay, good to know. Are there any other fundamental pieces of advice you'd give for people who are trying to improve their credit?
Yeah, start with the basics. Open a bank account if you don't have one already.
Yeah, that shows stability.
Make sure you have a steady income. Lenders really look at that. And if you have student loans, stay on top of those payments.
Definitely.
And as your credit gets better, start looking for credit cards with better rewards programs and maybe even higher credit limits.
Okay, so it's a journey.
It's all about building that positive financial foundation.
So how important is it to keep an eye on your credit once you've started working on it?
It's super important to track your progress.
Okay.
Check your credit score and reports regularly so you can see what's working and catch any potential errors.
Where can you get those reports?
You can often find your score on your credit card or loan statements through credit counseling services, or you can purchase it directly.
Okay, and speaking of scores, what's a good credit score to aim for?
Generally, a FICO score of 700 or above is considered good.
Okay.
The typical ranges go from 300 to 850, with those higher numbers being the best.
So 700 is a solid target.
Yeah, it'll open up a lot more financial opportunities for you.
Okay. Any final words of caution? Any common mistakes people should avoid when they're trying to build or improve their credit?
Yeah, a few things to watch out for. Don't forget to monitor your credit, that's key.
Right. Stay informed.
Have a budget and stick to it.
Right.
Don't just make the minimum payments on your credit cards.
Because then you end up paying more interest.
Exactly. And it takes forever to pay off the balance. Avoid applying for too much new credit all at once. And think carefully before closing those old credit card accounts.
Right, because that can affect your credit history.
Exactly.
This has been an amazing deep dive into the world of credit.
Building good credit, it might seem complicated, but it really comes down to building those positive financial habits and sticking with them.
Consistency is key.
It is.
For anyone looking for more resources and tools on building a solid financial foundation, we've got a ton of information available for you at wealthygoodlife.com.
So many resources.
We really hope this deep dive has given you the information you need to take charge of your credit building journey. And remember, building good credit is a marathon, not a sprint. Every step you take today is a step toward a brighter financial future. Now, we want to hear from you. What are your biggest takeaways from this conversation? Did anything really stand out? Maybe you have some lingering questions or even a few aha moments you'd like to share. Head over to the comments section at wealthygoodlife.com and let us know what you're thinking. Your insights and experiences can help others who are on the same journey. Before we go, here's a final thought for you to ponder. Think about one small, manageable action you can commit to this week that will move you closer to your credit goals.
One tiny step.
Maybe it's checking your credit report, setting up those payment reminders, or even just researching different secured credit cards. Even the smallest actions can have a big impact over time.
It's all about momentum.
Thank you so much for joining us on this deep dive into credit building. We look forward to continuing the conversation with you at wealthygoodlife.com.